Nike just out with results, and it looks like it was a miss on earnings. Earnings per share 53 cents. The consensus was for 59, but I will tell you that 53 cents in earnings includes a 25-cent charge related to a change in distribution in South America, so a sort of one-time charge there. As far as revenues, it was a beat for Nike, $10.1 billion in revenues. The expectation was around $9.8 billion. Everybody looking at Greater China because this was the first quarter that incorporated the COVID-19 outbreak in China. Remember, Nike's quarter ends just at the end of January. So it looks like revenue in Greater China for the quarter was down 4%. Nike saying that obviously the first 2 months of the year of the quarter, they saw double-digit growth, and then once we saw China go into lockdown as a result of the outbreak, you saw those sales begin to slip. I would also highlight one other point here on Nike, which is the e-commerce or digital growth, which Nike saw up 36%. Why is that important? Because if it continues to grow its e-commerce business, that's how it maintains revenues when we have lockdowns like we had in China in February, and now that we're starting to see in Europe and the U.S. Reminder, all Nike stores are closed in Europe and the U.S., so you can expect the executives to get questioned on what that's going to mean for the business this current quarter. Obviously, Nike leveraged to the economy, but the fact that the online business grew 36%, obviously a strong sign. And in the release, they say, as it relates to China, at the peak in February, roughly 75% of Nike-owned and partner stores were closed. However, nearly 80% of doors are open in Greater China right now, and it is happening, they're saying, at an even higher rate in key cities for China. So very much talking about the rebound that they're starting to see there, which will give investors, Wilfred, something to think about when they try to process what the impact is going to be in Europe and the U.S. Nike usually gives earnings on the guidance on the call. We'll listen for it, but I expect, like many of these other companies, they're not going to be able to have guidance because nobody knows how this situation is going to play out.
Yeah, absolutely, Sarah. I mean, as you said, the quarter itself ended in January, but those comments about how much was closed during February and March in Greater China, 75% of their doors, and then how much of it is open as of today, 80%. I mean, that shows a fairly quick rebound, 6 weeks or so in terms of the period in which a large chunk of their doors were closed. Now, clearly, they're saying 100% in the US and Europe are closed now. That's more than the 75% that was closed in China and Greater China. But the fact that it turned around so quickly, I think, is encouraging, though, of course, we'll have to wait and see if they're able to open as quickly here as well, Sarah.
And also, we saw Nike have a big move up as well as the rest of the market today. It had its best day since 2008. So people buying into the report. I think the key question on the call is going to be how much online business they can generate in places like the U.S. and Europe while stores are shut down.